That bank may not be getting paid on recommending gold to Hunter. So that may be part of why they're not mentioning it to him. I do think the fact that gold is 10x over the last 20 years is something crypto investors don't understand, right? Bitcoin today is a larger asset. It's like a $2.5 trillion asset. It's roughly the same size as gold was when the gold ETF launched. And that market has just grown and grown and grown. The reason it's grown is probably obvious, which is that US dollar debasement has been happening for 20 years. We now have $38 trillion in debt. And gold is increasingly accepted as part of institutional portfolios. Maybe it's not every portfolio, but it's no longer unusual to hold gold. 20 years ago, it was unusual. And so as we continue to print more money, as we continue to accumulate more debt, you expect this market to continue to grow. But yeah, gold 10x over the last 20 years. It's a remarkable thing. And I suspect it will 10x again over the next 20.
Yeah, absolutely. It's remarkable and something we would not even think about, especially crypto nerds who think crypto is the best thing in the world, right?
In recent months, Bitcoin has encountered significant challenges, which has caused concern among numerous investors. The price has declined from its previous highs. The market appears to be in a state of uncertainty, and there are currently concerns regarding the conclusion of the bull market. Some crypto professionals are questioning whether Bitcoin can maintain its momentum, while headlines are emphasizing short-term volatility. The sentiment has changed, and dread is disseminating at a faster pace than conviction. However, while the majority of individuals are preoccupied with the daily fluctuations in prices and are experiencing anxiety, a much more significant event is transpiring beneath the surface. In the past 2 decades, the market capitalization of gold has increased by a factor of 10, from approximately $3 trillion to more than $25 trillion. This occurred discreetly year after year as currency debasement intensified and investors sought protection. At present, Bitcoin is valued at approximately $2.5 trillion, or the same as gold was 2 decades ago. And the same factors that propelled gold to new heights are now propelling Bitcoin forward with an even greater intensity. According to Bitwise's chief investment officer, Matt Hougan, Bitcoin could attain a value of $6.5 million per coin within the next 2 decades. The foundation of his reasoning is not predicated on wild speculation or exaggeration. He indicates 2 straightforward wagers. The global store of value market will continue to expand, as it has for the past 2 decades, and Bitcoin will capture a growing portion of that market from gold. In the event that both scenarios transpire, which Hougan regards as the most probable outcome, the potential for growth is extremely significant. For additional insights, we should consult Matt Hougan directly. Please remember to subscribe, like, and enable notifications. I appreciate your attention. Please watch the remaining portion of the video.
Absolutely. So look, Bitcoin is 10% of the global store of value market today. That market is Bitcoin and gold. So Bitcoin is 10% of that market. If we look over the last 20 years, the size of the gold market has risen by 10x. Gold is a 10x from 2005. If that happens again, 20 years from now, gold is another 10x. The store of value market is another 10x. And Bitcoin is still just 10% of the market. Every Bitcoin's worth $1 million. That's literally all that needs to happen. I also think Bitcoin's going to steal market share from gold for that growing market. So right now it's about 10%. Could it get to 25% in 10 years? Could it get to 50% of that market? I think it's better than gold at most of the things gold does. And if it gets to 20%, Bitcoin's price doubles. If the size of the market 10x's and Bitcoin steals its share, you're talking about Bitcoin being in many millions of dollars. And I think that's actually the most likely scenario. Just to hit one more point on that, all you have to believe for that to be true is for what's happened for the last 10 years to continue happening for the next 10. Which is the store value market growing as people worry about the dollar and Bitcoin taking an increasing share. It's been taking share for the last 10 years. You just have to assume those trends continue and you get Bitcoin in millions of dollars. Well, that bank may not be getting paid on recommending gold to Hunter. So that may be part of why they're not mentioning it to him. I do think the fact that gold is 10x over the last 20 years is something crypto investors don't understand, right? Bitcoin today is a larger asset. It's like a $2.5 trillion asset. It's roughly the same size as gold was when the gold ETF launched. And that market has just grown and grown and grown. The reason it's grown is probably obvious, which is that US dollar debasement has been happening for 20 years. We now have $38 trillion in debt. And gold is increasingly accepted as part of institutional portfolios. Maybe it's not every portfolio, but it's no longer unusual to hold gold. 20 years ago, it was unusual. And so as we continue to print more money, as we continue to accumulate more debt, you expect this market to continue to grow. But yeah, gold 10x'd over the last 20 years. It's a remarkable thing. And I suspect it will 10x again over the next 20.
Yeah, absolutely. It's remarkable and something we would not even think about, especially crypto nerds who think crypto is the best thing in the world, right?
Absolutely. But the really important thing for Bitcoin is all you need for Bitcoin to 10x is for that market to 10x. Even if Bitcoin just treads water in terms of its relationship with gold, you just need what's happened in the past to continue happening, and you end up with $1 million Bitcoin. The same reason people are buying gold are the reason they're buying Bitcoin, which is they no longer trust the fiat system. They want some of their money in a different form of money that's not controlled by the state and that they can hold on a self-sovereign basis. The people who believe that in gold right now primarily are central banks. The people who believe that in Bitcoin right now are primarily individuals and wealth advisors and some institutions. But ultimately, it's the same trade. It's that most people's economic lives have 100% exposure to the fiat system. Does that make sense? Or do you want 1, 2, 3, 4, 5% exposure to something else, whether it's gold or Bitcoin or a combination of both? It's just a prudent diversification.
Why only 5%?
Well, maybe it should be more. My personal portfolio is more for sure.
How much do you hedge your personal portfolio with a non-US dollar?
Non-crypto exposure?
I would say non-US dollar denominated assets. So
Yeah.
basically, how much do you hedge with Bitcoin or crypto or gold?
Bitcoin and crypto and gold are like 30 to 40% of my personal portfolio. But I'm a believer in that ecosystem, right? In a major way. I think for many investors, just getting off zero into something like 5% would be a big step. And I suspect that's what we're going to see.
And I think many people in crypto would tell you only 30%. Really?
30 to 40. It was 40. The market's pulled back a little bit. 40%. And I work in crypto. Look, we all have, maybe not all of us, many of us have old retirement accounts and stuff that are 529 accounts for kids that are chock full of US equities. My net marginal dollar is going into crypto.
Hougan's thesis is founded on the 2 ways to win framework, which is perfectly applicable to Bitcoin. The initial wager is uncomplicated. Over the next 2 decades, the global store of value market, which encompasses both gold and Bitcoin, will continue to expand, as it has in the past. Assuming that the market expands by an additional 10 times and Bitcoin maintains its present 10% market share, each Bitcoin would be worth $1 million. That alone necessitates no extraordinary effort. Rather, it is simply the perpetuation of established trends. The second wager is the most thrilling. Bitcoin will not merely follow the current, it will rob gold of a substantial portion of its market share. At present, Bitcoin surpasses gold in virtually all aspects. It is likely scarce, more divisible, faster to transfer, and simpler to store. The math indicates that Bitcoin is worth many millions of dollars per coin if it increases from 10% to 25% of the store of value market, while the market itself grows by a factor of 10. This is compelling because it does not necessitate faith in a technology that is far in the future. All that is necessary is for the existing events to continue. The government will continue to print money. People will continue to seek protection from debasement, and Bitcoin will continue to seize market share from gold. Matt Hougan should provide additional information.
Yeah,
Exactly.
All you need to get to that number is for the store of value market to 10x again. As I discussed, it 10x'd over the last 20 years. All you're expecting is that process to continue, right? It will 10x again. And you expect Bitcoin to come to be roughly as large as gold. If those two things happen, you end up with $6+ million Bitcoin. That's not a big jump. You're not suggesting a huge difference. You're just suggesting what's been happening will continue to happen for another 20 years.
How could you be wrong on that?
Well, you could be wrong on it in two ways. Obviously, so you have two bets. You could be wrong on each of those bets. Gold could not cede market share to Bitcoin. Now that runs against most of history. Like most of modern history is digital things stealing market share from physical things. But you could be wrong on that. Gold could vacuum up all of that opportunity. Or you could have the store of value market not continue to grow. And the primary reason for that is if governments stopped printing debt and printing money. I'm just very skeptical. I don't see.
How is that possible?
It's impossible.
It's impossible.
It seems to be impossible. It seems to be impossible. It's not impossible. You see it in some places. We've seen it in Argentina recently, right? They went on a true austerity bent. It's not impossible, but it looks impossible in the current system where the impetus just seems to be spending more money. And that's part of the reason you want to do this. And what if I'm wrong by half? What if it gets to 3 million and it's at 30x? That's actually not so bad either. Down, you go to Starbucks and it's $6, $7 for your coffee.
Yeah.
I mean, it's totally crazy. And I think that's the overhang of that money printing. And that's why Bitcoin's $100,000, why gold is $4.
And that's not getting any better.
It's going to get worse. Of course, it's going to get worse. That's even before we get to the point where we, in the US at least, face down the Social Security budget, which is net negative. We have unlimited liabilities, and we're just going to need to print our money in order to do so. So absolutely. To go back to your question, I think you both keep pace with that inflation, but you also do more, right? To go back to that COVID example, the dollar's down 30%, Bitcoin's up 30x.
Yeah.
So you've done more than enough.
So it's actually, most of it is wealth building.
I think much of it is much. I'm not sure if I would go with most, but much of it is wealth building because more people are going into scarce assets. Both Bitcoin and gold are scarce assets. So if demand for them increases, you're going to not just keep pace, but actually do relatively better over time.
Okay. Well, $6.5 million per Bitcoin. Sounds good. If much of it is wealth building, if not, how do people who don't hold these assets survive or live and buy their matcha in 20 years?
Yeah, it's a great question. I mean, to go back to those two bets, you can think of those two bets as different. The store of value market increasing, that's a mix of wealth building, but also a lot of just matching those returns. The real wealth building increment is Bitcoin taking share from gold. That's one of the reasons actually I love Bitcoin more than gold in a portfolio, because to get to your point, you said, why 5%? 5% Bitcoin, because it's getting those two boosts at once, can serve the need. Whereas 5% gold will probably just, help you keep pace, right? With that portion of your portfolio, won't lose its purchasing power. So they are very different investments.
Can you explain?
They both seem like very good bets to me, to be honest. So to take the tokenization and stablecoin market, I'm not the only one who thinks that's a good bet. Right, the U.S. Secretary of Treasury expects the stablecoin market to 12x over the next 4 years. The CEO of BlackRock, the world's largest asset manager, says every asset, every fund, ETF, stock, bond, real estate will be tokenized. Who am I to disagree with the Secretary of the Treasury or Larry Fink? I think they're probably right. So I feel very good that the tokenization market will grow 100x over the next handful of years, and the stablecoin market will grow 10 to 20x over the next few years. That's consensus. And then the second bet, that Solana will take a growing share of that. Look, Solana is a challenger in these markets. Ethereum's the dominant asset. I love Ethereum. It has the lion's share of the stablecoin market. It is the leading play on tokenization, but Solana is a legit competitor with an interesting technological differentiation. And importantly to me, it's extraordinarily easy to use. And the community has a ship first attitude. And you can see it winning an increasing number of mandates. So it's behind ETH. I'm not saying it's going to catch up or match it, but I think it's going to rise up and be the legitimate competitor in this space. And we'll see how it sorts out. Right now, it's a tiny share of the market. And it's also a very small asset. It's like $100 billion asset. It's 1/5 the size of ETH. How often do you talk about Solana versus Ethereum? Do you do 5-to-1 ETH to Solana?
Probably much more, yeah.
Probably much more even.
Probably much more. You talk much more about Solana than ETH.
You may talk more about Solana and ETH, and yet it's so small. Like I think
why?
It's newer. it was outside of the regulatory perimeter under the previous SEC. So if you were an institution building in the stablecoin and tokenization market during the Gensler era, your only choice was ETH. You couldn't build on Solana. It might be a security. It might be illegal. You wouldn't build there. That's only been released for a year now. So when it's newer and it had this regulatory cloud that's been released, of course it's going to be smaller, but it's catching up. Again, I'm not sure it will catch all the way up. Doesn't have to. If it doubled versus ETH and the stablecoin market doubled, it's up 4x. That's a pretty good return. Those seem like very reasonable bets that the stablecoin and tokenization market will double and that Solana relative to ETH could double as well. And that's a 4x if both of those happen. Those seem like good bets. For what it's worth, I'm bullish on the set of them. And the way that I personally invest is to own all of them. What do I specifically like about the Solana setup? I think ease of use is a killer app that's underrated by investors. Investors like to talk about throughput and they like to talk,
TPS, which is
TPS.
This is the kind of word that I actually hate on this podcast.
Of course.
Every time I'm here, what is this? Explain to your mom. Transaction per second. Who cares about this?
No one cares. And even something like centralization, which is really important, that is an important philosophical difference. It has long-term meaning in the world. But for an end user who's trading, who's on-ramping, ease of use is the killer app. And Solana is just easy to use, just dead easy to use. The more centralized element versus the diversified L2 infrastructure or even subchains makes it just very easy to use. And I think the market overlooks that. So one of the reasons I'm so bullish on it is I think the market isn't looking at one of its killer features, which I think will cause it to win an increasing share of the market. And I also think it's been sort of labeled with this meme coin only overhang because it was the center of that activity. And the history of technology suggests that even if sort of jokes and fun things happen first on a network platform, that doesn't mean it doesn't develop into something very serious as well. So I think there may be a behavioral dismissal of Solana by some in the sort of traditional community that causes them to overlook it. And anytime you have those behavioral mistakes, and I'm seeing two in Sol, the meme coin thing, and then ignoring ease of use, that's sort of alpha in the market in my view.
Absolutely. Institutional investors love ETFs and they love revenue. Solana has the most revenue of any blockchain. Therefore, institutional investors love Solana ETFs.
100%. They love the Solana story, right? You go to an institutional investor and you talk about Bitcoin and they're like, I can't touch it. I can't feel it. I don't know what digital gold is. What is this thing? You go to them and you talk to them about stable coins and tokenization, and that's in their wheelhouse. And then you say you have this relatively small blockchain that generates the most revenue in the crypto market that plans to be, internet capital markets where all stocks, bonds, et cetera, trade. And that is actually the leading place for stock tokenization right now.
Hougan identifies debasement as the dark matter of finance when examining the forces that are propelling this transformation. It is imperceptible to the majority of individuals on a daily basis. However, it provides a comprehensive explanation of the economy's operations. The relentless destruction of money's purchasing power is the underlying cause of sky-high real estate prices, soaring stock valuations, and expensive commonplace costs. The dollar has experienced a real-world decline of approximately 30% in the past 5 years. Hougan asserts that this is not a transient issue that governments will resolve. Interest payments have now become the second or third largest item in the U.S. federal budget, and it is now impossible to escape the debt spiral without printing additional money. He is of the opinion that this debasement trade is only beginning. It may have been designated in 2024. However, by 2027 or 2028, it could potentially dominate every significant portfolio strategy on Wall Street. This entails an increase in the inflow of funds into Bitcoin, a greater number of institutional investors, and a greater confirmation of the hypothesis that scarce assets prevail in a world of infinite money production. In addition to Bitcoin, Hougan acknowledges that Solana presents an immense opportunity. He employs the same two-way to win framework in this instance. Initially, he anticipates that the stablecoin and tokenization market will experience substantial growth. The U.S. Treasury Secretary anticipates that the stablecoin market will expand by 12 times in the next 4 years, and BlackRock CK's CEO has stated that all assets will be tokenized. Subsequently, Hougan asserts that Solana will acquire an increasing proportion of that expanding market. At present, Solana is a $100 billion asset, which is 1/10 the size of Ethereum. However, it generates the highest revenue of any blockchain. Hougan is of the opinion that Solana has the potential to become a $1 trillion asset within the next 5 to 10 years, which would represent a tenfold opportunity from its current status. He considers it to be one of the most exceptional setups he has ever encountered due to its institutional appeal, simplicity of use, and the narratives surrounding stable coins and tokenization. Hougan also notes that only 5% to 10% of the financial advisors who control the majority of America's wealth are presently allocating to crypto on behalf of their clients when he speaks to rooms full of them. Bitcoin and crypto are still considered to be early for ordinary investors until that figure reaches 90%. His recommendation is straightforward: purchase, reserve, and anticipate. According to him, the genuine alpha in cryptocurrency is not found in short-term trading, but rather in the recognition of the technology's long-term effects. Real wealth was created by individuals who acquired Bitcoin at $100 and continue to hold it to this day, rather than by speculators who pursue daily fluctuations. Therefore, the inquiry is as follows. Are you prepared for the consequences if Bitcoin follows the same trajectory as gold over the past 2 decades? Please share your opinions in the comments section below. I appreciate your attention. Please remember to like and subscribe.